Each month, Cathie Wood gives her monthly update on everything going on in the markets right now. This month, the US had the historic $1 trillion infrastructure bill, which Biden deemed a once-in-a-generation event. This month, the main theme that everything revolved around was inflation. And the reason inflation is so important to investors is that certain investments do very well in times of inflation, while others get crushed. So in this video, we'll be looking at Cathie's crypto update, which this month mainly focused around Bitcoin. The inflation debate: what is the biggest threat right now? Is it inflation or deflation? And then Twitter founder Jack Dorsey recently stated that the US is on the brink of hyperinflation, and we'll see what Cathie Wood thinks about that. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, the crypto update from Cathie this month mainly focused around Bitcoin, but there were some awesome developments going on with US mayors. Check this out.
Bitcoin, just some very interesting news. 3 regulators got together and wrote a paper which basically saying this is how we'd like to regulate stable coins, and the market took it very positively. No surprises. This had all been articulated and expected in some way. As far as Bitcoin specifically, we thought there were a couple of very good moments this week. Eric Adams, who just was elected mayor of New York City, said he would accept pay in Bitcoin, and the Miami mayor said he would accept much more than, I can't remember the time frame, in his salary in Bitcoin. So we have some friendly competition. They both want Bitcoin in their states, so Bitcoin developers and the Bitcoin ecosystem, which is fantastic. And then Square, Jack Dorsey, when asked on the Square earnings call today, would you consider supporting any other cryptocurrency? And he said, no, just Bitcoin. Bitcoin is the native currency of the internet. And so we thought that was very interesting.
So this was awesome. If you haven't heard, there's now multiple US mayors all competing for which US state is now the most Bitcoin friendly. What a turn of events. We had the mayors of Jackson and Tampa saying that their next paychecks will be paid in Bitcoin. The mayor of Miami has been a vocal Bitcoin bull for a while, claiming Miami is the crypto state. And then more recently, great news for people living in New York. Up until recently, New York has not been able to have full access to all the crypto products. But the new mayor-elect just so happens to be a big Bitcoin bull, and has also said he will be taking his initial paychecks in Bitcoin. Talk about excellent news for Bitcoin and the entire crypto market. Okay, next up, the main theme around Cathie's update this month was around inflation. And the big debate going on right now is which is the biggest threat? Is it inflation or deflation? Cathie has clearly said that she is in the deflation camp. However, the markets could be giving different indicators. Check it out.
So what are the markets telling us about inflation? The markets are they're actually conflicting. They're sending conflicting messages. Let's start with the stock market. The stock market itself is up, so it's not worried per se. But if you look at the sectors performing, you've got energy and financials at the top for the year, 54% and 35% respectively. Those two sectors are associated with strong economies, very strong boom time economies with a yield curve steepening, meaning long rates are rising faster than short rates are. So that would be consistent with inflation. But the other two top performing sectors are real estate and consumer discretionary. And those two do not benefit from inflation. They benefit from inflation coming down and lower interest rates. So that's very interesting. The stock market is confused about this topic. And what about the bond market? The bond market is clearly in the lower inflation, if not deflation camp. The dollar's going up. That is an anti-inflationary force. Crypto is in the inflation camp. If you think about Bitcoin as being a hedge against inflation, if that's how you're thinking about it, or NFTs being a hedge, collectible, a hedge against inflation. So that could be in the inflation camp, as could housing.
So on the debate on whether we'll be getting inflation or deflation, Cathie Wood believes deflation. She believes because of technology, these will be driving down prices. However, when it comes to the market, there are conflicting indicators. The stock market is a bit confused. The bond market is in the deflation camp. Dollar going up is anti-inflationary, and crypto and real estate is in the inflation camp. Now, if you haven't checked in on the growth of the money supply recently, here is how it looks right now. This is M2, and as you can see, it's beginning to go exponential. We are now adding trillions of dollars to the money supply every single year. So, are we on the path to hyperinflation? Well, Jack Dorsey of Twitter recently said he believes hyperinflation is coming to the US, and it's going to change everything. And recently, we had billionaire Paul Tudor Jones also saying that the number one threat right now is inflation. So, with trillions being printed, we should be getting runaway inflation, right? Well, the question is, where is all this money going? And Cathie Wood makes a very interesting point. Take a look.
Could this mean, therefore, that velocity is going down, the velocity of money? What does that mean? Now, this is a little esoteric, so forgive me, but I think it's really important. If consumers are spending their money on assets instead of goods and services, then what's happening is all of the money printing that people think is going to cause permanent inflation in the price of goods and services, that is wrong, that it's actually moving into assets. So velocity involves GDP and money growth. GDP is the production of goods and services, not assets. So the velocity of money has been coming down because people have been saving and putting more money into assets. Is that what's going on here? Well, in the GDP report this week, I think it was, or maybe it was last week, real GDP growth was 2%, a huge disappointment. But what the headlines did not capture is if you looked into the guts of the GDP report, what you would have found was the only reason GDP grew was inventories. And everybody thinks we're terribly short of inventories. Real final sales, so this is taking out inflation, real final sales were slightly negative. Now, could it be, and I'm seeing this behavior on the part of millennials, could it be that they would prefer not to spend on goods and services, but to invest, especially in crypto and NFTs and stocks?
So the reason that inflation won't be going parabolic is because of where the money is going. And if you didn't already know, there's actually two main parts to inflation. There is the money printing, which we're all aware of, but the other side of the coin is velocity. And velocity is money being spent on goods and services. For example, if you take your paycheck and you go out for a meal and you tip the waiter, money velocity 1, this waiter then takes that same cash and goes and gets a taxi home, velocity 2. And then the taxi driver takes that money and at the end of his shift buys a takeaway, money velocity 3. And you'll notice that it's the same cash being spent. And so for there to be massive inflation, the money has to be circulating. So the question is, what's happening with money velocity right now? So this was money printing, which we all know is going exponential. However, this is money velocity, which has been falling with a huge drop in 2020. So cash is not circulating with goods and services. Now, Cathie is saying, could this money be going into financial assets instead? Well, what do you think? Here is the US stock market, and this jump up at the end certainly seems to correlate quite well, right? And here is US house prices. Again with the same jump at the end. Now, this is great for everyone who owns financial assets, but unfortunately, it's also growing the divide between the rich and the poor. Every month, Cathie Wood gives her update on everything going on in the financial markets. Crypto this month was mainly focused around Bitcoin. There are now multiple US mayors all jumping on the crypto wagon, trying to outdo each other with how much of their paycheck is going to be in Bitcoin. The US passed a historic $1 trillion infrastructure bill, which Biden called a once-in-a-generation event. And I personally think that this will now be a once-in-every-president event. The main theme for this month and the big debate going on right now is inflation. And inflation's important to keep an eye on, as certain investments do well in times of inflation and others will get crushed. Cathie Wood is well known for being in the deflation camp. However, the market indicators are pointing to inflation. She also believes inflation won't get out of control, and this is because it's not being spent on goods and services, but it's going into financial assets. And this is great for people who own financial assets, but not great for people who don't. And unfortunately, this leads to a larger divide between the rich and the poor. So there you are, guys. Hope you enjoyed. Tell me, what do you think is the bigger threat right now, inflation or deflation? Let me know below. For now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. If you haven't yet subscribed to the channel, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.